That in people's minds is still unresolved, and yet the markets have rebounded the entire decline and actually now approaching all-time highs. So it's been too fast, and I think a lot of people liquidated and then never got back in.
Which part was too fast? The rally or the April lows?
Both. It was a waterfall decline.
Yeah.
And we look back since 1900, of the 12 waterfall declines previously, almost all are V-shaped bounces, except for 2022. So I think it aligns with history. But even on my way here, someone stopped me and said that they're, just a person who watches CNBC says they're still bearish. They don't understand why markets have rebounded. I think the majority of people are bearish. Well, they said PEs are too high, and I said, but the 10-year can come down because Powell thinks there's inflation risk premium in the 10-year yield. And if that comes down, then PEs aren't expensive. We're glad it survived the black swan event this year because
it filled that gap. Yep.
Yes, yeah, and outperforming this year by 500 basis points, so it's a good year for granny shots. But I think it's a reminder that we try to get investors focused on long-term themes. Like AI doesn't really care about tariffs long-term, and cybersecurity doesn't care about tariffs. And so these are the names that, as you get through that, as that noise lifts, the stock should recover.
Have you been unnerved by any of the macro data that suggests maybe data center construction, manufacturing that second derivative is slowing a bit?
Well, the second derivative should eventually slow. But the need for AI and the innovation that's coming really is driving a lot of innovation. And when there's innovation, that's where economic value add comes in. So I think so much of global GDP the next 10 years is coming from AI and cybersecurity.
Exciting here is we've done 3 IPOs of preferred stocks in the past 6 months. Strike was our first convertible preferred, and that was up 29%, while all the other prefers were down 6%. Strife was a fixed preferred, paying 10% fixed yield at par. That's up 22% versus all the other preferreds down 4.5%. So Stride was the third of those preferreds. And what's going on here is we are offering fixed US dollar yield, and we're swapping it into BTC yield, which is what our equity investors want. The big breakthrough is that in the preferred market, the capital never comes due. There's no refinance risk. We're basic 150% Bitcoin, Joe.
Do you think at this point that there's, let me just say, what are you waiting for at this point in terms of good news? I think the regulatory environment since the election is definitely improved. We've talked about how much harder it gets to mine, and there's halving. When is the next halving, and what are the next moves that it would cause the asset Bitcoin to get to some of these? I don't know whether you have Tom Lee type projections. I think Tom the other day said eventually it could get to 2.5 million per coin or higher before we never really will get to mining the last coin, will we? Not in our lifetime.
Not in our lifetime, but the last 6 months have been tremendous. All of the fundamental planets have aligned. Bitcoin's on their balance sheet, and every single week there's another announcement. I think that, it used to be we're focused on the halvings, but at this point, the entire natural supply of Bitcoin is only 450 Bitcoin available for sale every day. That's sort of about $45-50 million a day at this level. That is all being consumed by the Bitcoin treasury companies, and the Bitcoin ETFs are coming on strong. So I'm very bullish. My forecast in July of last year in Nashville was Bitcoin's going to appreciate 29% a year on average for the next 21 years. And that moves it from, it was about mid-60s, 65,000 to 13 million a coin in the year 2045. I'm getting more bullish on that forecast, but I'm certainly comfortable with these fun back and forths. The highest standard of in this case, transparency would be a public company audit from a company like KPMG, where they're auditing both your assets and your liabilities, combined with officer representations pursuant to Sarbanes-Oxley about related parties. And and the like. And so we are a publicly traded company. Our assets are audited. Our Bitcoin reserves are audited by KPMG, as are our liabilities. I think that, we're always thinking and considering, is there a way to do proof of reserves in a secure way? We're not enthused risk. But we're considering it. We're thinking about, is there a way to do it with a zero knowledge proof? And we're also always thinking about self-custody and what is the right way to manage custodian risk. And I think what you see is there's the OG crypto advocates who developed a bunch of very strong ideas over the past decade, and there's an emerging class of institutional Bitcoin holders like BlackRock, like the ETFs, and like the Bitcoin treasury companies, and they're focused not just on the assets but also on the life.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support,